Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So in today's video, we'll be looking at how to catch reversals. So let's get started with the video. Standard disclaimer, I'm not a SEBI registered analyst and any stock discussed in this video is not a buy sell recommendation. Please consult your financial advisor before taking any trade or making any investment. So let's get right into the video. So what is a reversal? Right. So a stock reversal occurs when stock changes direction after a period of consistent movement. Right. For example, after an uptrend, it may begin a downtrend or vice versa. So a stock is going up and suddenly it stops and starts moving in the opposite direction, or it could be a stock is going down and starts moving in the upwards direction. So that is what a trend reversal is, or in simple language, a reversal. So spotting these reversals early can lead to high profit potential. So these reversals, catching these reversals on time is a very nice way to catch high profit potential uh, you know opportunities, but it requires understanding the market signal. So just take a look at this example, right? So there are multiple ways that you can buy a stock. Usually the way that trend followers, swing traders follow is that they buy stock in the direction of the trend. So right, so stock is going up, they usually buy the stock in the direction of a trend when it consolidates or forms a range and then breaks out or forms any pattern or whatever method of buying that particular stock they are using, right? And but if you see, many times what happens is that a stock is in a downtrend and you actually get a chance to get an early entry, right? So just imagine, just take a look at this example, PG Electroplast. So as a trend follower, you will be waiting for the stock to actually start an uptrend, and then you'll wait for the stock to form a base. So as a trend follower, you would be buying this particular stock at this price, let's say, or maybe at this level, at the crossing of the previous high. And that is actually a really good method, and most people should actually stick to it. And even for the majority of my trading, I also follow this method, the simple trend following method, right? Where we just follow the trend and we take entry at the breakouts, right? But in some cases where you are able to actually catch the reversal, your entry point would be much earlier. For example, here somebody would be entering somewhere around this 250 level, 260 level, or maybe 240 level. But if you were able to identify a trend reversal happening, then your entry could have been much earlier, somewhere around 176, 186, 170, 180, and those levels, right? So that gives you additional benefit. Plus, reversals also lead to sometimes quick moves in the short period, right? So I'm just going to explain why I like reversal, why I like to trade reversals, and why you should try to do it at least. So, why trade reversals? So, trading reversals is very tricky and it's a strategy with a very low probability of success. But when done correctly, it's very rewarding. So, here in this strategy, you can say, in case of trading reversals, the probability of success is very low, because most of the reversals fail. And why is that? I'm going to show you a simple reason why is that, is because mainly of the overhead supply. So what is an overhead supply is that when a stock is going down in a downtrend, there would be many trapped buyers at multiple levels who actually thought the stock is reversing, or maybe they were averaging down, or maybe they bought at different points thinking that okay, this is the let's say this is the end of the downtrend and now the stock should start heading higher, and in that anticipation they buy that particular stock, and many of them are just stuck there, right? So there's a lot of pending supply that is left. So when the stock actually reverses the trend and starts to go upwards, those trapped those trapped buyers, as we call them, those trapped buyers at different levels, they begin to sell that particular stock, because again, at that point, they're just thinking about recovering their cost, right? They are not thinking that okay, I'll hold it for the profit. At that time, they're just simply thinking about recovering the whatever money they had which was in loss, and now it is over. So that is like the common basic psychology of the market participants, of the people, right? And you must have faced a similar situation in your trading career as well if you have been around long enough. So that is why it creates a lot of overhead supply at different levels. For example, this was looking like a nice base, and some people would have bought it at the anticipation because the company is good, the future is bright, and multiple things, right? But after that, you see, the suddenly the stock fell, and very few people have actually the courage to keep holding those the stock through these downturns, so that's why they sell as soon as the price reaches back at their cost level and then move forward. So that's why it's very prone to failure. That's why the probability of success is very low in case of trade reversal. But then if the probability of success is so low, then why should we trade reversal, or why should we attempt to trade reversal? So it's rewarding because there's a mismatch that is happening when a stock is moving in the opposite direction of the market. So my point of view of trading reversal is that in many cases there's a mismatch, right? So mismatch because could be because of the perception, because of the multiple reasons. Maybe actually there's not a mismatch. Actually the stock is going down because the company has given terrible results and many other factors. There's overall selling in the market and many. But if none of those reasons are there, there's a very high chance there's a mismatch that is uh, there. This mismatch could be reasonable or unreasonable depending on the circumstances. When the match is unreasonable, it tends to correct itself in the due course of time, and that is where the probability of making a quick gain is very high, right? So when there's a mismatch, so what I mean by a mismatch is that, let's say your market is going up, your sector is doing good, the company financially is doing really good, but the stock is actually not moving, and actually it's in a downtrend, or there could be multiple other reasons. Let's say there could be a reason that a stock is going down continuously, but you know that after a quarter, down the line, a quarter, let's say 2 quarter down the line, that company is going to do very well, right? Still the stock is hammered. So that is again presents an opportunity of the mismatch, right? So that is what you have to identify in case of reversal. And when that mismatch is corrected, the stock usually gives a very sharp move, right? So what are the key indicators for the reversal that you need to keep in mind? First is the price section. You should be able to understand the price section. Second, I like to use other moving averages. Okay, I'll just show you with examples how I use both of these. So points to keep in mind while observing the price action of a reversal stock. So when you're observing the price action of a stock that is attempting a reversal and you want to buy it, so first thing that you should keep in mind is that how are the sister stocks doing? So sister stocks are just stocks from the same sector, right? So let's say there's a DCS you are looking for, then you should be look at how Infi is doing, how Wipro is doing, how HCL is doing, right? So you should be able to understand the overall how the sector is doing, because again, if this whole sector is in a down move, then there's a very low chance that that particular stock might reverse, but it will reverse along with the overall sector. But let's say sector is doing well, company is doing well, but there's a mismatch in case of that particular stock. So there could be multiple reasons, but in due course of time it will get corrected, right? And second thing you should focus on is how's the volume. Is the volume very high during the down move? If there is any kind of a climax action, right? And if the volume is low and the stock is still slipping down, so is the price basing or it's in a continuous downtrend? Another price section you should look at is that is the stock still in a sharp downtrend, or it has started forming a base? Because again, the probability of success in case of stocks that are forming a base is very high as compared to the one that is still in a downtrend, because there haven't come the buyers, right? There are not enough buyers that are stopping the price firstly from going down. And how is the overall market? So attempting a reversal in a bad market wouldn't make any sense, right? So let's take a few examples. So again, there's a luck was also involved in some of these cases, like this first example, Tata Elxsi. So my entry was around this 6982. So what was the reason, right? So my reason for buying this stock at that particular price was simple. The stock was overall in a downtrend, but the sector has started doing well, right? But the still stock was in a downtrend. Another reason to pick it up was that there was a climax section, right? So when what I mean by climax section is that although the volume was not there, but the climax action was that the stock was went continuously going down. There was a sharp downturn and then a quick recovery. So that is kind of a climatic action that the stock was showing. And there was a good base formation that was happening from the last few months. So you look at May, June, July, August. So at least 4 months of there was no continuation of the downtrend, but actually the price was just staying there. There was a one dip and then there was a small reversal, right? So I'll show you this with the moving averages as well, how I use the moving averages with it, right? Right. So I'll just take you to trading view and we'll see it combining with the moving averages, right? So there are, so like many of you have asked what kind of moving averages that I use, is that it's just simple. It's a 10-day moving average, 21, 50 and 200. I use a combination of these four, right? So first thing you'll see, it was in a very sharp downtrend. The IT had started doing well, right? There was a bit of climactic action here, and since the stock was in a base formation, so when I'm looking for an entry after reversal, is that there has been going a lot of base formation and there's a cluster of the moving averages there. What I mean by cluster of moving averages is it's just simply like your 10, 21 and 50 are just very close to each other, and then the price crosses those all together, right? So that was the entry point. Again, there was the 200 moving average as well, like, but again that was okay. Then my luck also played some part here, and some fund exited the stock, and after that there was a very sharp up move for next 2 days, right? So it was a bit like most of it was luck, but again I was ready to capture it. Okay, so if we look at another example, next example from this angel one, if you see, so here also if you see, what happened is that there was a mismatch from the overall sector. So if you look at the sister stock of this particular sector, they were doing well, they were in a good uptrend, right? But this one was continuously going down and down and down and down. But here if you see, after a really sharp downtrend, there was some bit of base formation happening. And see, you one thing you see, I've already marked this downward trend line. So my point was simple: whenever the price crosses this particular trend line, that is my entry point, right? And this was the day when it actually happened, and again a very sharp up move next day. And since then it is showing again signs of reversal. So in case of reversal, what you have to do is that if you get a quick move like this in 1 2 days, you are getting a 10 15 20% kind of a move in just 1 2 days, exit from that particular stock, because that is the mismatch we are looking for, that is the opportunity we are looking for, where the stock moves very quickly, right? So you just take the money and leave. Then you actually, or you can actually wait for the stock to set up again after that, right? So again, if you see, again it is setting up, and once it crosses this level again, that could be my entry point here. Another example, if you look at, so this is one of the example of failure where the stock tried to do multiple trend reversals, but actually none of them worked. So after the IPO, so another point that you can keep in mind is that this actually works a really good with the IPO names, which are just listed within the span of last 1 years. So they are continuously in a downtrend and then they are basing. So that is a really nice good opportunity to capture the reversal as well. So again, it attempted to reverse multiple times. So you see this is the climax action, and since then you see the base formation, you see the cluster of moving averages, but there was no follow-up. So that's why I said in the beginning that it is a strategy which is very prone to failure. But when you get the opportunity, you get a quick move very quickly. What I mean to say is that a quick move in a very short span of time and a very sharp move in a very short span of time. Like another example which worked successfully is WarTech Technologies. So again, the perception was bad. The stock was in a continuous downtrend. If you see, it was in circuits, and plus I had a simple trend line there also. But if you see from the last few uh, months, actually from August, September, from last 2 months, there was no continuation of the down move. Actually, it started forming higher lows, actually, if you see, right? And then there was this opportunity whenever the price crosses this particular level, right? So see, so again, the problem here is that it is a kind of a circuit stock, but you get a 30% kind of a move in just 4 5 days. What else you need, right? So you are looking for this kind of a mismatch move. Plus, a luck is also required here, right? So another example, Tata Technologies. So same same concept here. The sector was IT sector, the sector was kind of improving. Plus the IPO stock, it was in a continuous downtrend, but you see a small base formation, you see the cluster of moving averages following, forming, and then there was a sharp up move that day. And look at the volume as well. So during the whole base formation, during the whole downtrend, you see the volume is quite low. But since there has been a reversal action, just look at the volume activity. So that means there has been a lot of accumulation going on. That is what my guess is in this particular case, right? So if you look at other example, Paytm also. So again, opportunity of mismatch here all as well. So again, this the perception was very bad. Just look at the lower circuits it had, and there was a very very long kind of a base formation. So it at this particular point, there were multiple things working for this particular setup. First of all, it had a gap filling setup as well. It was above the short term moving averages, and it was near the 200-day moving average. Since then, like, just look at how beautifully it moved up once it crossed that particular level, a 30% move from that point. So it's not like the reversal won't make you any money. It's kind of difficult, because again, if you see another example of failure here, right? So if you see it's going down, it's in a downtrend, IPO stock again downtrend. So this was the first failed attempt where actually it formed a base. There was climax action as well, kind of a double bottom, and plus the cluster of moving averages, and the price finally crossing it. But there was no continuation, and soon it hit my stop loss, and then it went down again. But again, it showed another climax section, and since then the trend has been slightly improving. But again, I'll say I would like to attempt a reversal trade here above this 190 to 193 level in this particular case. Another example that I have is Alkal Amines. So I have done this reversal in this multiple times. So you see this stock has been a downtrend very very long time, right? So first reversal attempt that I got was around somewhere here, right? So again, first of all, there was no continuation of the downtrend. You see this bottom that it made few months ago, again it came down to that level, and from there there was a reversal, and then the cluster of moving averages, plus there was 200-day moving average as well. And then whenever the price crosses that particular level, that is the entry point. So if you remember, what I said earlier is that in case of reversal, you have to actually look for if the stock gives a very sharp move in a very short span of time. That is where you just simply exit. Okay. So one question you guys might be thinking is that how I get these stocks? Is there a screener, or is there anything? So unfortunately, there's not a screener for this particular. You just have to manually go through the charts. You just look at the stocks which are, or the sectors. Start with the sectors. You just simply look at the sectors which are not in favor of the market right now, or maybe look at the sectors which are in favor of the market, but in that particular sector, if a stock is not moving, although there could be a problem with that, but you can start there and then you can wait. So again, keep a small part of portfolio for these kind of attempts, and this one actually, this and PGEL, DCX system, and PG Electroplast worked really really well. So again, here if you see, uh, after a downtrend, after the IPO, the stock was in a downtrend, and then there was the downtrend, intensity of the downtrend kept on decreasing, right? And then you see the price coming up above the all the moving averages, and there was cluster, and then there was the good entry point at multiple levels, and see how beautifully it moved. So PG Electroplast, this is actually one of my most successful trades which I was able to buy at this particular point. Unfortunately, I sold a bit earlier, somewhere around this level instead, and since then you see how much this particular stock have moved. So somebody who had the fundamental knowledge for this, they have done well in this particular name. So again, no recommendation, right? So don't treat reversals as the enemy. You can try to master them, you can try to attempt them multiple times, because again, when the market so again, reversal also works well in a situation where the overall market was in a downtrend and just bottoming out. So in those particular cases also, you'll benefit a lot when the market was in a mood of a pause or in a downtrend, and then it's finally reversing from there. So you'll get many early opportunities there as well. So keep a small part of portfolio to try these, right? So just don't treat it as evil. So I hope you guys enjoyed the video, and if you guys learned something new, don't forget to like, subscribe and share, and I'll see you in the next one. Goodbye.